Pankaj Pandey, head of research with ICICI Direct, joins us with a fundamental take on the market. Pankaj, the big talking point this Friday morning has to be TCS. What do you make of those numbers? Because if I look at what Street was betting on versus what they've delivered, it's not been a blowout set of numbers.
Good morning, Nikunj. You're right that TCS didn't give the kind of numbers which would sort of excite the markets, but I think it's still a decent set of numbers. So probably we'll maintain our target price of 2450 with the EPS of around 110. But having said that, I think in a sector like this where consistency matters most, I think TCS has done a phenomenal job, and I think it is still quite consistent in terms of their commentary, in terms of whatever they have delivered up till now compared to a peer like Infosys. So my sense would be that TCS would clearly stand out in terms of preference, and which is why we believe that this stock would again sort of continue to find a preference. In addition to that, probably Wipro also is expected to deliver a good set of numbers. That is what we would expect. So in general, if you look at all the tier ones have delivered a stable set of numbers, except for HCL Tech, where the numbers were far better than expectations.
Pankaj, hi, morning. What's the sense that you're getting about the telecom space and the way it's bled, brokerages as well reacting negatively to the 2G auction, and that Reliance Jio is going to join the race and only intensify competition? How does one approach these dips? Is it a good buying opportunity into names like Bharti or an idea, or do you think one should now completely steer clear from the telecom space?
There's some nervousness is definitely expected in the space, and largely the two listed names wherein we had seen a bit of a crack yesterday. I think once we are done with auction, we would see a fairly stable set of growth for most of the telecom players. Having said that, probably there will be some more competition, but what we have seen is that from more than 10 players per circle, at least we have seen some bit of a consolidation in the industry, and pricing discipline is there, so which should help most of the players. So I think this is a good opportunity to buy, and I think the concern would be on the 900 megahertz, where the quantum may not be so high, but in 100 megahertz, I think the quantum of auctions would be quite high. So in that sense, the scarcity probably might be there in the 900 megahertz, but not in the 1800 megahertz. So in that sense, we wouldn't expect a very sort of a negative or a very competitive pricing to happen, but probably yes, there will be some nervousness around till the auctions get over. But we believe that this is a buying opportunity for the sector because we would expect a stock, even for a stock like Idea, to sort of deliver 42% kind of a CAGR in profits over the next 2 years. And they have a net to debt EBITDA of about 1 time, so which is quite decent. So even if that were to happen at higher prices, I think they would still be sort of quite well placed to actually play on this opportunity.
Pankaj, so let me challenge your thoughts, and my key concern here is that Indian telecom business is more like a commodity business. Whichever way pricing power is moving, that way stock prices always tend to move. The reason why telecom cracked in 2008, 2009 and 2010 is because of increased and intensified competition. If competition will intensify once again for the sector, a sector which clearly is a commodity sector will obviously start bleeding.
Nikunj, if you look at one point in time, you had more than 10 players per circle, and now I think you would have expectation of about 6 to 8 players per circle. And also, if you look at data is one segment which is sort of emerging as a big opportunity. Last year, all the players, including Vodafone, had witnessed phenomenal growth. So voice is a business where you will not see a phenomenal growth, but data is a business where you will see a good amount of growth. So what we are expecting is about 24-25% kind of a overall growth rate for the sector in the data side, and which is expected to be a big opportunity. And as of now, this does not contribute so much. But we believe that probably you will not see that kind of a top line growth, but bottom line growth would be substantially high for most of these players. And I think we have seen a fair bit of improvement. So even if you see a minor uptick in the ARPMs, which is what has happened in the past, probably you will see a large swing in the bottom line, so which is what we would sort of expect over the next 1 or 2 years.
Has Tata Motors corrected? Because for Tata Motors, the differentiating factor is JLR. And if I look at the JLR dispatch numbers for the month of December, for China, for Europe, and for US, they were way above street estimates. So if the JLR sales numbers are strong, why has the stock gone down from 410, 415 to levels of sub 380?
I think, Nikunj, if you look at in a luxury kind of a market segment, you need to keep refreshing your portfolio. So so there is a big concern that Tata Motors will have to do a lot of capex to actually keep refreshing its portfolio. So from that perspective, if you look at, the company had announced a capex plan probably which acted as a dampener for the stock. But having said that, what we would expect is that the company to sell about closer to 5 lakh JLR volumes. And domestically, we still believe that the challenges are going to remain. So we are not expecting a revival in the CV cycle, and the other segments are also down. So in that sense, it is still be driven by JLR volumes. But having said that, I think we are expecting good set of numbers, and we've been maintaining buy on this particular stock, and we still like the stock.
Pankaj, after IndusInd Bank, Yes Bank, Axis yesterday, today is HDFC Bank's turn. Steady performance, what's it that you're expecting?
So within banking industry, if you look at PSU banks are expected to sort of underperform from the earnings perspective. However, private sector banks, if you look at, we are expecting an NII growth of about 20% and bottom line growth of about 20%. But for HDFC Bank, we would expect a 25% kind of a bottom line growth. Credit growth is expected to be 16.5% and deposit growth of about 15.5%. But having said that, if you look at whatever results have come out, what is happening is that there's a bit of a sort of a slight uptick in the NPAs, which is sort of unnerving, or which might sort of force these stocks to sort of consolidate at current levels, since private sector banks are already trading at rich valuations, especially HDFC Bank. So it is trading at 3.4 times FI15 basis. So we would expect the stock to consolidate, and but from a relative basis, they are still far better than the PSU banks.
Out of the 3 companies which have come out, or 3 IT companies which have come out with numbers so far, which is Infosys, HCL Tech and TCS, which stock do you think has scope to give maximum return in the medium term?
Nikunj, from overall sectoral perspective, we have a neutral outlook on the stock because we believe that the EV money is already made in the sector. But having said that, we would expect that the good set of numbers from TCS to continue. So though we have a target price of 2450 and largely we'll be sort of basing it on FI15 basis, but the commentary is quite positive. So if I have to choose one stock, that will be TCS. Though it is trading at a slightly expensive or slightly higher multiples compared to Infosys, but I think in a sector like IT, I would expect, or I would prefer consistency rather than volatility in the performance. So which is why I think TCS would clearly stand out. HCL Tech would be the second preference. I think the core software business is improving, so probably that might lead to slightly better PE multiples for the stock, because as of now, if you look at, the multiples have remained the same, and largely the price performance is driven by the profit performance. So that would be the second preference, and Infi would be the third preference within the stocks which have declared results.